Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, U.S. exceptionalist. Like, to my mind, the big question for investors is like, we've had this 15-year plus run of where it's like the only game in town has been you invest in the U.S. You did not get paid for diversification. Arguably, you didn't even get paid for diversification within the U.S. because you should have just been in tech stocks the entire time.
Yeah.
But I really feel like this is the moment where people are asking, like, is this one trade that's worked out so well, is it coming to an end?
You know what I really like? I like talking about U.S. exceptionalism in markets because no one immediately starts debating like the definition of U.S. exceptionalism. That drives me crazy.
Right. Because in the broader realm of like just sort of politics or society or life, like is the U.S. exception. But in markets, it's unambiguous.
Yes.
In markets, it's unambiguous that U.S. assets have just been where you want to be for a long time.
So not only have U.S. equities outperformed recently, but they've really come to dominate the market as a whole, as a proportion of the market. So the entire world, you know, even with U.S. stocks falling recently, the entire world basically still has an overweight on America, right?
The world is overweight. No, I mean,
it's true.
And if you're a global manager and your benchmark is the MSCI, AWS or whatever, you know, it's still in large part a U.S. trade. By the way, I was looking at the Bank of America Fund Manager survey today, which is one of my favorites. And after 2 straight years of long Mag 7 being identified by fund managers as the perceived most crowded trade, and this most recent month was gold, which was really interesting.
Oh, so it's finally changed.
That
was the thing, because like for years and years and years, everyone was like, oh, FANGs, like big tech, so
7.
crowded. Like, and the suggestion was don't even bother buying because the valuation is just so eye-watering at the moment. But in actuality, if you wanted to not even outperform, but like meet your benchmark, that was the only trade, was buy tech.
This is the true pain trade, right? Because it's like everybody is long tech. Everybody is overweight tech. How can you make money buying tech? And yet you still had to buy tech just to keep up. And so now there's the question of, is the pain trade reversed? Because if there's so many people are so into tech and so into the U.S., can they actually make the risk and take the move of like, you know what? I'm going to overweight Germany, or I'm going to buy Chinese stocks or whatever it is. And these are, I think, this is the moment where like you have to get this call right.
Seriously.
And this is the call of the moment.
And you haven't really had to do that before. Now things are getting interesting.
Right. We all know the backdrop of all this, so we don't really have to do that in the intro. But I'm very excited about our guest. We're still here in London. We are going to be speaking with Ozan Tarman. He is the Vice Chair of Global Macro at Deutsche Bank. And he talks and thinks about all of these questions with his clients all the time. So we're going to get a slice of what he's thinking about. Ozan, thank you so much. Great to be here with you in person.
Wonderful to be here. Honestly, I'm a big fan. I listen to you guys all the time. My clients and friends are big fans. So it's great to be here in my hometown.
This is very important to us when clients say that, when guests say this on the episode. We hate when they say it before the recording starts. Because like, that was a total waste. Do you agree with the premise that I set up, that this is essentially the big question that everyone has to grapple with right now in markets?
Without a doubt, and quite tiringly.
Sorry to exhaust it. We're exhausted too.
I mean, even we're very exhausted after the Liberation Day, but even before all that, we're exhausted from how wrong the whole Gen 2, Gen 20 consensus went. Everybody and their brother were believing S&P would go anywhere between 7,000 to 6,500. TY US 10-year would go to 5%. It kind of did, but for all the wrong reasons. And then euro dollar, right? I mean, everybody who's saying parity, believe me, politely, deep inside, they were believing 0.95, that dollar CNH would go to 8. I can go on and on. And why, right? First of all, this US exceptionalism, we can go into tech as well. But first and foremost, it was about fiscal expansion. US was the one, the big one, printing the most, especially after Omicron. And on top, yes, the Magnificent Seven, the wonderful Silicon Valley story. and the belief that Germany, Europe, and China, for different reasons, would never match the same fiscal ambitions. All these three things I mentioned are completely turned on their head. From DeepSeek to Germany's 1.1 trillion, to China holding on to their currency and choosing more fiscal, all the consensus trades and views are thrown into the water.
It is true. In January, we recorded that episode with the ECB's chief economist, and it was basically about all the challenges facing Europe. And then 2 months later, European stocks are surging. Everyone's getting very excited about that market. I have what I imagine might be a difficult question, but maybe it's not for you. How much of this has to do with things being really bad in the States versus things actually going well in Europe?
I really like that question. It's not a difficult question, actually. It's a key question. At the very beginning of the year, it was more about rest of the world doing much better than expected. Germany step is a huge step. After the election, I held a micro dinner in Frankfurt, as you do. And both our big cheeses and some of our key clients really did not see this coming. Maybe 300 billion, maybe 400 billion, mainly on defense after the shock in Munich. But infrastructure, health, education was hardly mentioned. Something like 1.1 trillion. My head of rates trading was throwing that out as an idea, which was quickly pushed back. Then the Hamburg local elections happened, and right away, Merz came up with that number. And before the new parliament sets in, that's sometimes these words, hyperboles, are used too much, but that was a historic step. On top, China, DeepSeek, that was a big development. I mean, I was jumping up and down on my Bloomberg on Saturday and Sunday of that weekend. Whatever you want to believe. I mean, maybe they'll do it for 5, maybe they do it for 50. They definitely don't do it for 2 billion or 1 trillion, right? So DeepSeek will change the world for Magnificent Seven and all of us consumers. But then to Tracy's question, recently, it's becoming more about US hurting itself. US hurting its soft power, US creating a confidence crisis in a way. With full respect to Scott Bessent, who's been a dear client friend as well, who's been to some of my New York macro dinners, when he says what Mag 7 goes through, a quote, has got nothing to do with MAGA, it's more about a DeepSeek issue, I would kindly disagree with that. Of course, DeepSeek, as I told you, has got many factors to do with it, but tariffs, much more than people expected, ended up shooting US on its own leg.
Is DeepSeek about DeepSeek, or is it a metonym for the rise of competitive Chinese tech?
I think more for the latter, but my friends that I do trust in, beyond market mine yours, from the start believed that it was real. Some things it did much better than ChatGPT, and I think US, since it has given me my education as well, the first reaction to it was the US, I know, this is for real, it may help all of us, let's compete. So in that sense, it was good for humanity as well. But yes, that was the first step in this year in which China said, hey, I'm here. Then the second big step was last Wednesday. I mean, Joe and Tracy, last Wednesday, unfortunately, 5-6 hours before this, when I woke up to see the China fix, to see if they devalued big or not. And when I was relieved to see they haven't, then I looked at US 10-year, as you do, and Euro-dollar, and then I didn't unfortunately sleep. Why? Because
I didn't sleep that night either. I was on my couch updating my Bloomberg app on my phone, just looking at 10-year yields.
Imagine if we did this 1 week before. So because US 10-year had gone to 455, and at the same time, dollar was weakening. So even that Sunday, 3 days ago, I kind of knew this was the vibe. Some people were really worried about it, but I didn't see. I didn't see in 2 days dollar melting like that, and at the same time US long ends being basically lost 10 and 30 year. That is my terroir. I grew up in emerging markets. My first responsibility was emerging markets. Again, no hyperbole. That was emerging markets like trading. That stage, I almost wanted to shout out responsibility, like almost like an MC to the market. Somebody needs to blink. Somebody needs to come. I thought it could be Fed, and right that afternoon, President blinked for the first time.
Yeah.
You know what else was very emerging markets-y that week? Having policymakers calling for rate cuts when the dollar was falling and yields were going up. That is classic EM, right?
Well, I was thinking that if we were classic EM, wouldn't the IMF peoples be calling for rate hikes and not rate cuts in that environment? Would they say, you need an independent central bank that is committed to sort of orthodoxy. You got to hike in these environments.
That, my friend, you guys are in London. We're honored. That, unfortunately, is the trust moment. We went through that in this island just 3 years ago. But even then, at the height of the panic, when quite justifiably some were calling for a hike, Bank of England instead chose QE. At that time as well, people said, that may be inflationary at the end, etc. But that ended up calming things down. I do believe, first of all, last week, if President didn't blink, and 10-year and 30-year continue to sell off with the dollar selling off, EM style, I think Fed would have come, definitely, and the QT. I mean, we can talk about that. I think they will do that right away in May anyway. But I think they would do QE as well. Not cut. I think Powell really doesn't want to cut because of all the inflation growth dynamics. But they would have done that. And I don't agree with some of my dear client friends who say even QE, inflationary, wouldn't Longan react to that even more. Maybe they are kindly talking their book. If we go through that kind of episode, a QE may calm things down. But Trump blinked 2 or 3 times. So I'm not too sure, famous last words, we'll go through that Fed QE stage. Now, there's a big debate already in the markets, even though my dear friends are tired and wounded. Do you play for the next leg to come? One more quote-unquote attack towards 450 and higher in US 10-year, much more importantly, 5% and higher in 30-year? Or do recession worries and growth worries always outweigh? Is it now, when worries peak, is it now time to receive? I kind of have a lean towards the latter, and it has won by 25 basis points as I speak, so something may have begun.
One of the reasons we wanted to talk to you is because you are constantly speaking and arguing over these trading ideas with your clients. And I guess I'm curious about...
I like the arguing.
Yes. I guess I'm curious, is anyone buying the Trump administration argument that okay, we're taking some short-term pain in exchange for longer-term, better economic growth? Is that something that people are actually positioning for? Or is that resonating at all with your clients?
Again, very good question. Up until mid-February, end of February, a lot of them did. Now we don't think about it, but euro at 113, 115. Back then, to talk even 110 euro was come on, calm down, etc. Because people did believe tariffs have to be inflationary. Market is not believing. Market is not pricing it. That's why it's not happening, etc., etc. Then credibility started to become an issue. When you start with Canada and Mexico, and when you don't mention China that much, then you decide to do something on Canada and Mexico, even though market and most economists are revolting, you immediately step back. Delay it for 1 month, you start losing credibility. Then people start relaxing about the Liberation Day.
Yeah.
You come up with this big sign with very, let's say, creative way of calculating it, and you hit China and Asia the most. Then people say there's a credibility issue here.
Actually, this reminds me, because you and I met for coffee in New York City 3 or 4 weeks ago. And I think one of the comments at the time, and now that this seems like ancient history, but the thinking at the time was it's interesting. Trump is hammering Canada and Mexico a lot more rhetorically than he is China. Maybe he's going to go easy on China. And I had forgotten that was actually in the discourse even 3 weeks ago.
I do remember our conversation as well. And you made me think too, because when I said, I still believe, look, I think for this year, this yours US exceptionalism trade is here to stay. It's not just a 1 quarter thing, because that I heard a lot as well. Ozan, good call. We like your blue mega hat, but this is just 1 month. This is just 2 months. This is just 3 months.
Yeah.
Oh, now it's 115, etc. But then you told me, look, China, they're doing a lot better in EV and solar. They're starting to do better in tech, in fiscal. So maybe we are not that exceptional after all, you had told me. And then also on that going easy on China, he was trying to hide his cards.
Yeah, he was.
Then he went 7th gear. But China is playing a good one. If a lot of people, back to that Wednesday when we didn't sleep, a lot of people fear that either that Wednesday or that Thursday, China would devalue big. To be fair to both my research and trading, Perry, Malika, we really believe that people shouldn't exaggerate. They would hold the ground, and it was to their advantage to choose fiscal more. So far, so right. That also proving making things quite difficult for the president. Like even this morning, right? I opened up, okay, it's more colorful for Tracy and Joe. Not wonderful, but S&P down 70, Nasdaq down 350. And then as I was walking to the tube, China may talk to you guys if you show respect. Immediately S&P rallied 70 points.
By the way, for listeners, we are recording this Wednesday, April 16th. It is 10:58 London time, 5:58 New York City time. We always have to get these in our market conversations.
Yeah, I think it's so funny we actually have to include the exact time now, which we didn't have to do before.
We used to just do dates.
Yeah. I like that.
Right.
Before ECB, before Powell speaks in Chicago.
Yeah, exactly. Well, okay, so on the tech front, one thing I don't get is so much of the American exceptionalism trade has been about AI enthusiasm and this idea that America has a head start and no real competitors, at least up until the unleashing/arrival of DeepSeek. In Europe, we still haven't really seen a real contender in the AI space. I think that's fair to say. And there has been this long-running disappointment that Europe is just not where other places like the US and China are when it comes to cutting-edge technology. That hasn't changed as far as I can tell, but it seems like investors are kind of willing to overlook that, or maybe they think that U.S. isolationist political policy and the idea that Europe is going to have to come together to fight Russia and, make up for a less active U.S. Maybe that's going to be the thing that sparks technological advance?
A bit of both. I think, first of all, especially Germany, but Europe can reinvent itself. That's going to take a little bit of time. In the meantime, things like our NVIDIA, so things like LVMH, Hermes have to carry us, which didn't happen yesterday because of what's going on with China. So it will need time. At the moment, Europe does AI, but does the chips, like the part of the chips that helps the ASMLs and TSMCs of the world. Germany doesn't necessarily have its own ASML. So, but at the same time, this is a country, at least a country, Germany, but overall continent that has shown that it can reinvent itself. It's not going to happen in 2-3 months, but all these faux pas, all these unforced errors America is making is giving the old continent some time.
Europe is arguably now the leading, clearly the most advanced place in the world for aerospace technology. And we had those headlines yesterday about China halting deliveries of Boeing. Already Boeing was falling behind Airbus largely due to operational problems. There's clearly still some just sort of like classical industrial might on the continent. Much of it aerospace, probably, and engines, other parts that feel like areas for potential further growth.
Agreed. Look, I go back and forth between two categories really. Category one is, after having a great 4 months, I'll be wrong. U.S. exceptionalism will be fully back.
Okay.
This was all a joke. America.
Yeah.
Category two, for reasons like you outlined, European industrialism, China will continue to lead the pack. To be honest, it's going much better than I would have thought. This much outperformance didn't happen since 1980, etc. It's going to be continue the team. And category 3, USA Inc., America will take everything down. It will be such a serious confidence and market crisis that with all due respect to European aerospace, the Danish...
True global recession.
No place to hide.
I go back and forth. How can you not? You go back and forth these 3 or 2 categories. My gut feel and reasoning still is that category 2, the broad team of 2025 will win. Because why? I think president will continue to blink. And also I have a backstop now. I do believe if things get very ugly, 5% and more US 30-year ugly in US, Fed will come with QE at least. Collins, last Friday. She gave a hint. She said like, the one more word, we are ambitiously, or whatever the word is. She didn't just say watching. We're definitely watching. She was the first one to give most investors belief that they could come with more steps. And then Waller. I know that now Waller, people are half joking about, is he really saying it or is he lobbying for the job?
Interviewing? Yeah.
But he's I think he does believe it. He's a respected man, and he did hint that cuts can be front loaded if things get uglier. So first of all, I believe blinks will continue from the White House, but even if they don't, I think we have the backing of the Fed.
I mentioned in the intro this idea that the world is sort of de facto overweight the U.S. just because of the market size and its weighting in a bunch of different benchmarks. Does that provide like some cushion for U.S. equities selling off? Like the fact that you do have index investors, passive investors that have to be hugging a certain benchmark, which happens to be filled with a lot of American equities.
Completely agreed. Exactly. Tracy, in a simple way of putting it, I was discussing it with a senior colleague yesterday. This is great because let's go right into that reallocation, the big team, right? If big players were really, in the big sense of the word, with a big R, reallocating away from the US, there will be a lot of circuit breakers in S&P. Mm-hmm. I don't want to sound, but that is, it would be, I'm not sure how S&P would open tomorrow morning. So there's a difference between even these big real money, sovereign wealth funds trading in their own time zone and making much bigger, much longer dated decisions. So I think this latter, it's more, we do want headlines, especially us emerging markets, FX people, we do get excited. But true big reallocation, I don't think we're there yet. That being said, there are trades. So these big, it's not just my wonderful hedge fund friends, fast money, getting, what's the word Trump used, queasy. It's beyond it.
Yippee.
It's more serious than that.
Yeah. No, Tracy wrote a great note about that yesterday or the day before. I can't track. It's like real money actually moving away. Everyone looks for analogies to past experiences, and it's like, is this like great financial crisis? Is there like a run element? Is this like COVID where it's a supply shock
the Nixon
element?
Shock.
Is this like the Liz Truss moment where I don't really like the term because I don't like insulting people, but you hear that term moron risk premium exist. The other, when you describe, what if the Fed comes in to backstop? Another possibility is a Brexit analogy in which there's not an immediate crisis really. It's just the start of a slow degradation of the economy. It sounds like when you're in that number 2 spot where it's like, okay, there's some blinking going on, there's some Fed backstopping going on, that maybe that is the analogy perhaps that we should be thinking of.
Spot on. I mean, soft power is being eroded. My alma mater, I'm biased on the issue, but Harvard headlines, right? That doesn't help the global perception, whatever your politics is. So sure. In that sense, in fact, when I was trying to get some sympathy from some clients while forwarding around the Harvard headlines, one of them did say, immediate answer, US's Brexit moment.
Yeah.
To your point. So for it to get more serious, uglier, and GFC like that than that is the big word.
Right.
DM credit.
Okay.
DM credit. That needs to shake for it to become, God forbid, more 08 to 09 like.
What's the trade? Because we can all sit here and talk about these big macro themes like American exceptionalism, but given some of the restrictions on large investors and given the reality of trading in certain markets like, Chinese assets, what exactly do you do here?
Mm-hmm. I think, look, first of all, I do believe 4850 in S&P may have been a base, a floor. Even if I'm wrong on that, if we go down towards that very fast, more Fed blinking and QE will come very fast. So I think we'll bounce very, very fast. That I will forget that I was wrong. I continue to believe Europe and China has a lot of fiscal room. So I feel at the moment quite confident that DAX, MDAX, the medium caps, and China Tech will continue to outperform US. On rates, we had started discussing with Joe. I do have sympathy that receivers from here on the long end will work. That may be a big trade actually talking about despite tiredness and wounds, a crowded trade, steepeners, still crowded because on paper it does make sense. For different reasons for US and Europe. But short end may stay lower and long end may get sold off more. On that one, so I think flatteners at certain stages may give pain to people. ECB, for example, okay, she will cut tomorrow, but I don't think there's so many unknowns, right? How the tariff negotiations will go, etc. On June, she will not blink. She will not give you the hint that this will continue on June. And if people start getting worried about a June skip, there you go. That's not going to help your steepener. Our official call is that terminal rate in Europe is all the way down to 1.5. My excellent chief economist Mark Wall does get pushback from that in Spain's and Italy's of the world, even before the recent developments and even before Euro went to 113. Soft dollar, look, we're talking big levels on Euro, on Yen, on Swissy, on gold. But my bias is still to sell any dollar rallies.
So we're talking about that Wednesday night when dollar was selling off.
Wednesday morning. Last Wednesday morning.
Actually, for me, it was Tuesday night, but I mean, it sort of depends.
Your Tuesday night.
It was my Tuesday night.
We all know what you're talking about.
Yeah, we all know
so
what night.
Fine.
Yeah.
Luckier you.
Yeah. I was up. That was the Tuesday night. I didn't get any sleep. There was that day, and as you said, this is EM style trading, right? When you see all three equities, treasuries, and the dollar going down. If we were actually talking about the U.S. as an EM, if you're an analyst as a sell side talk, there would be a lot more. There'd be a lot of talk about politics and how politics works, and what is there an independent central bank, etc. Like, how much of the conversation is really becoming about stability of just like the sort of internal workings
Rule
of
of
the U.S.
law,
political order,
institutional strength.
Again, very, very relevant. I mean, in that kind of sense, if we half revisit that your Tuesday night, and if President sends 5 more tweets about Fed should cut right away, not good.
Yeah.
Some people even believe on the Friday speech, I don't know now, 2 weeks before.
Yeah. It's okay, Powell, we've all lost track of time.
If President didn't tweet 5 minutes before the guy spoke, I mean, conspiracy theory, but maybe he wouldn't prefer inflation that much over growth. So if you create that kind of Fed independency question mark, it's not gonna help your trade. At this moment, talking about EM, if this thing goes like this, America needs friends. America finance needs friends. Yeah. Powell and Besant, when they auction, need friends. So talking about EM, right? Whenever the president, these days, things can change. He's a very successful political person, needless to say. But as of now, whatever the topic is, from tariffs to Powell to Harvard, when he talks and writes too much about an issue, it doesn't help with this Tracy's capital allocation situation. Real money sells dollars.
Yeah.
Mathematics. And at the moment, he needs real money to buy his auctions.
I'm not going to say that the U.S. is an emerging market, but I am going to ask you, with all of your emerging market experience, what advice do you have for people who are trying to trade the U.S. at the moment?
I mean, watch the 3 key people: Trump, Powell, Xi. Who's going to blink when? I think that would be my advice even a week ago. Trump already showed that maybe he has less cards. He's blinking. Then the second thing is, I mentioned Collins, I mentioned Waller, not cuts, but I do believe that QE is out there. So I think we have the backing of the Fed. And then finally, Xi, even though, okay, he has the cards, but this is not good, right? So at some stage they need to talk. Even the basic, what we quote unquote expected after the president rallies last year, 10% for everyone else, 60% China. Even that's much better than this. So at some stage there will be that summit between them, and we will be at a better stage. So this all makes sense. That's why I'm not category 3. Yeah. That's why I'm we will be okay. Maybe 48.50 will hold, but rest of the world and Europe will do better. If I believe that Trump wouldn't blink because of ideology, whatever, if I believe that Powell will say, your problem, not even QE, and if I believe that China would play a very, very, even a tougher hand, then I would fear Brexit or '08 scenes more. I don't.
Yeah. I just have one last question. It's kind of a curveball, and I'm certainly not asking you to make your call or a trade. One thing that I've noticed, though, over the last couple of weeks is that Bitcoin has not actually been as tech stock-like as it used. I used to joke that Bitcoin traded like 3 tech stocks in a trench coat. And I'm wondering, when you talk to people, we all know it's a speculative trade, whatever, that's not my point. But when you talk to people, particularly NEMs, do you get the sense that people take it for real as a monetary asset, that they want to have some allocation to it that's separate from all of this?
Can I answer that and then add one more theme that
Please.
I want to?
Yeah.
So Bitcoin answer is, it was about to become even more serious in a good sense.
Really?
It was becoming even more of a digital gold, not just some of my dear client friends and their big PA portfolios, but some institutionalization was taking place because of what they believed Trump would bring to the table. But then my answer to Tracy on credibility, on tariff, there's a reason why all these, if he did these China, Canada tariffs on Jan 20, we would probably want to trade first at 102 euro dollar. Now we're trading at 115 because credibility is gone.
Yeah.
A little bit similar now with the whole Bitcoin situation. Back of the class. If you're a big believer on a big bounce in the market, maybe you would, trade it in your own portfolio, etc., etc. But some of the funds buy and sell side getting more serious about it as an asset in an institutional side. I think that took a hit. This other theme that I want to bring up, so that I don't regret, tax cut.
Oh, yeah.
So, that, again, talking about a big veteran, one of us, big market player, Besant, there's a reason why he's literally saying to your colleague Hordern, this whole year has been tariffs. We need to talk, he's talking to Ozan. We need to talk tax cut, deregulation. Well, you're the man. You're the one to change the narrative to that. So he's claiming that they're moving fast on that, like in Trump 1.0. That's going to be important. Whether it's going to be just the extension of the existing tax cuts, or will he, beyond tips and stuff, will he bring something new to the table? We can discuss whether that's good or not, whether this economy needs more fiscal easing. But yes, if they, beyond words, if they can succeed on changing the narrative from tariff madness to more the House tax cut, deregulation, how fast it's passing, can it be done before July 4th, etc. And that's gonna help the very not what the screens are telling you now, but that would help S&P and Nasdaq.
Even there, though, we're getting confused mixed signals, right? We had a story overnight where the Trump administration was said to be looking at tax hikes for people earning more than $1 million a year. So I can see why people have forgotten that part of the narrative, because it is a little bit confusing at the moment.
I completely agree with you. Look, for Trump 2.0, it has been, for the economic team, it has been a stumbling start. They haven't...
A stumbling start and a stumbling stock.
Exactly. It hasn't been understatement. It hasn't been a Michael Phelps start.
Ozan Tarman, thank you so much for coming on Odd Lots. This was the perfect moment, perfect guest. Really appreciate it.
Thanks so much. That was fun.
That was a lot of fun. That was a fun conversation.
Yeah.
I like the sort of the three scenarios that he laid out. And unlike everyone else, I changed my view. Not that anyone should ever listen to my view, because I've never gotten anything right. But whatever I'm feeling usually changes by the hour at this point.
Yeah, which I think is fair, right?
Yeah.
That's the reasonable response to the flood of news headlines that we're getting. I feel like we should just add, Odd Lots does not provide any trading advice.
That's right.
This is our disclaimer. But that said, I do one thing that seems certain to me really is the higher term premium in the treasury market and the idea of a steepener. Also because I think the US is just going to have to issue even more short term over time for a variety of reasons, one of which could be foreign investors stepping away from the treasury market more than they have already been doing. So that's one to watch. And then just on the Bitcoin point that you were making, I've been thinking about this too over the past couple of weeks. Like, I have been eagerly waiting to see what the next big Bitcoin talking point is, because this is one of the real strengths of Bitcoin is it always comes up with a new narrative, right? And like,
well, it can't be tariffed.
Yeah.
It's kind of, people have called it gold,
kind
of
for digital gold.
And it's actually, like, people should look at the chart. It's not trading as bad and as NASDAQ like as it had been for a while, which makes me wonder if it's a little bit acquiring some of those safe haven properties people supposedly claim.
Yeah, but it needs something like pithy for Trump tariff world, and we're still waiting for that. But I'm sure there are people working on it right now.
The other thing is, when I think about all of these, so there's two things that I think about. One is, there is this scenario that I don't think gets talked about as much, which is like the global depression trade or the global recession trade, right? And so the idea that it's so disruptive and the U.S. is so important that the idea of it just being like a sort of U.S. recession, which many people obviously think, it actually not that, it actually is something.
Which seems like a realistic possibility.
And then the other thing is that, like, when everything looks sort of bleak and there really isn't much cutting edge tech in Europe, and the U.S. is maybe shooting itself in the foot, and there are limits to the degree to which anyone can really invest in China, it's not surprising that gold is now perceived. Like, that's the one thing, right? Like, the one thing that will be there for you is if you have a yellow shiny metal in your safe, and it's not surprising that that's rallying.
Plus, gold is just shiny, as you say.
It's really nice. It's really
it has
nice.
That physical attraction, that sense of comfort in times of uncertainty.
Well, we went to the jewelry store. I guess that was like February or March or whatever, and I tried on that $75,000 gold necklace, and I feel
do you regret not buying it?
Yeah, I feel really dumb not buying it because A, a bunch of people told me it looked good on me, but B, more importantly, that'd be like an $85,000 gold necklace today.
Joe, we're not that far from one of London's jewelry districts. We can go shopping right after this. It's about 10 minutes away.
I'm really underweight gold, Tracy, so I might have to do that.
All right, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Get more of Ozan's thoughts. Check out his LinkedIn, Ozan Tarman. Check him out there. Follow our producers, Carmen Rodriguez at Carmen Armin, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. Thank you to our London producer, Moses Andam. For more Odd Lots content, go to Bloomberg.com/oddlots, where we have a daily newsletter and all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you like it when we talk about trading the end of U.S. exceptionalism, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.